Palantir stock is the main subject of today's video. Selling completely out of Palantir stock. We're going to discuss that. We got other stocks to talk about in today's video, other things going on in the market as well. But I saw this tweet here today, and I was like, man, I think it's an important subject to talk about right now. Okay, Chris Patel says here, Palantir. So just to clarify, I'm completely out of Palantir. I sold on the way up, definitely missed some gains, okay? And he sold out of Palantir stock completely, right? And I think a lot of retail investors, or if you hold any of these sorts of companies, right? Palantir, NVIDIA, any of these stocks that are kind of booming right now, right? The AI related stocks. A lot of people are looking at it like, is this a great time to take some profits? Is there a lot more upside here? You're going to miss out on a lot of opportunity. And I want to share some thoughts here in regards to Palantir and kind of this space that I think are very important for everybody to kind of understand what's going on here from kind of my stance. So I appreciate everybody joining me as always. Thanks for being subscribed, folks. I appreciate y'all. And so in regards to Palantir specifically, right? You make a move like this, you got to understand you're selling a company like this likely at very early innings in terms of their long-term opportunity here, right? Unless you believe there's nothing in terms of this AI stuff, if you believe this is not real, it's all just hype, companies aren't going to make substantial dollars off this. This isn't a game changer for Palantir. It does nothing for them. If you think that, right, then I understand cashing out of Palantir. But if you really are of the belief that this is a game-changing opportunity for Palantir for the next 5, 10, 15 years, and this company was going to grow regardless, but now it's kind of going to have supercharged growth over the next few years, then I think you're ultimately making a pretty large mistake in regards to selling Palantir right now. Because this company, you got to understand, when you got game-changing companies with game-changing products, they go on multi-year runs, and it's not just like it's 1 quarter or 1 year or something like that. Okay, so selling a Palantir here, to sell out of it completely, especially in my opinion, is a bit of a dangerous move. Once again, unless you have the thought process that this is all just hype, there's nothing here. Now, you could have believed that, I think, up until NVIDIA's guidance that they gave. What was that, last week or the week before, when they were supposed to do $7 billion for this upcoming quarter, and now they're talking about doing $11 billion. When you hear something like that, I think that you should start to take this stuff more serious and realize, oh gosh, this is actually for real, right? And this is a great picture. I actually saw somebody post this, right? This is kind of like a famous picture in the retail community of what people think it's like to hold a stock and what it's actually like to hold a stock, right? And in regards to a stock like Palantir, I could understand some retail folks bought this stock in the 20s, bought this stock in the 30s, right? And so they went through a rough ride, all the way down to $6, $7 a share, right? That's vicious, and that happened in a 12 to 18 month span. But at the same time, you have to kind of differentiate between your feelings and what's actually going on with the company's fundamentals. When I look at a company like Palantir, I see a company that fundamentals look like it's going to be exponentially better over the next several years than it's been over the last several years in terms of revenue growth and in terms of obviously net income, right? So in regards to Palantir, if you wanted to sell something of the stock, you don't have to sell it all. And I think that's an important subject, we got to talk about. You don't have to sell all of a stock. Let's say you're looking at Palantir and you're like, oh man, it's ran a lot. I don't know, I'm having trouble figuring out what their future valuation is or if it's overvalued or whatnot. I think I want to take some chips off the table. So if you look at myself, I have 4,855 shares of Palantir in the public account, for instance, right? If I was of that thought process, which by the way, I'll address that in a moment. If I was of that thought process, I could sell 1,000 shares, I could sell 2,000 shares, something like that. I could sell shares as it goes up. So maybe I could sell 500 shares at 15 and another 500 shares at 16 and another 500 shares at 17 if I was of that thought process, right? It's not like you got to cash out. A lot of times people think you got to cash out all your stock, and it's you don't have to do that. You don't have to do that, right? You have to be really convinced that this baby's going down massively, right? Now, secondly, am I personally interested in cashing any of my Palantir shares I hold? And the answer to that is absolutely not. This is so early innings here, it doesn't even remotely interest me to cash out a Palantir stock right now. Okay, that's just my personal view on this. It's not something that interests me at all. What I look at with Palantir specifically is I look at a story here in which analysts have been growing revenue 12% this coming quarter, right? 16% the following quarter, 17% the following quarter, 18% the following quarter. I mean, based upon those NVIDIA numbers, based upon Karp's commentary about, basically interest in their product is unprecedented like he's ever seen, right? I mean, I'm going to go out there on a limb and say Palantir is going to have destroy these numbers. And I mean, absolutely obliterate them in terms of revenue growth for, who knows how many quarters in the future, but probably a lot of quarters. Because when we get a big technology shift, it's not like it's just a 1 quarter thing. Like, this is something that lasts likely for years to go in the future, right? And we know in regards to Palantir, very sticky product that honestly, I think once people sign up for it, they're likely going to stay signed up for it. And I don't think if a big company signs on with Palantir, they're going to ditch the product. I mean, usually their contracts are for many years, big dollar amounts, and I just think Palantir, everything I've looked into the company, I think the product is so great that it's hard for me to fathom like a big company signing up for them and then ditching them. So what this is going to add up to is likely Palantir in a situation where they're going to destroy these numbers, and likely they're going to beat every analyst's expectation for the next several years in terms of what analysts were expecting in terms of the revenue side, right? Now, obviously, if that's the situation, then likely earnings per share could come in a lot better as well, right? At the end of the day, if Palantir comes in with 20% revenue growth next quarter, 30% revenue growth, 40% revenue growth, I mean, that can completely change your EPS expectations around the company. The EPS could be far better in that situation, and that changes like how you even think about value in the company from the earnings per share side when you're looking at forward Ps, when you're thinking about future profitability. This is something very important to keep in mind, right? Now, that's on the fundamental side of Palantir, right? But you got to also think about it in terms of stock price. Like, this has one of the best short-term situations going possible for it, right? In terms of the S&P 500 inclusion. I mean, it looks like, in my opinion, it's probably happening at the end of this year or the beginning of 2024. I mean, look at all the criteria, and you're going to find that Palantir's, almost there now at this point in time. They're almost there. So you got to understand, like, the closer you get to this S&P 500 inclusion, the more folks are going to buy into Palantir because understanding there's an arbitrage there, right? Of basically then, once a company actually gets on the S&P 500, then you have a massive amount of funds that are forced to buy in, right? And if at that same exact time you have a fundamental story that's going really, really good, then you don't have a lot of reason to sell out of the stock. That's what happened to Tesla stock when that went into the S&P 500. It had a great fundamental story, and then you had all that money that had to funnel in anyways, right? Because it was you had to buy it. Like, you own an index fund that tracks S&P 500, you have to buy it. There's not like an option of like, no, I'm not going to buy that one. I'm just going to buy the other 499 stocks. No, you have to buy them all, right? So these are things that are very important to keep in mind, and why I think it's a big risk to sell this stock right now, given the short-term things that are going for, in the long-term things. And also remember how much of a pessimistic view there is of this AI, right? Turn on CNBC. They hate AI constantly. If anything, that gives me some comfort. They call it a bubble. They've almost taken a stance on there. I watch Fast Money. I watch a lot of different shows on there of being so like wary of what AI is, and is it real? It's just a bubble. It's just hype. And a lot of the people on there are, have very negative views on it. And the more I look at it, I'm like, I don't know if you should really be having those sorts of views, given what NVIDIA just told us, given what every company CEO is saying that's in this space about how much interest there is in their products right now. Is that really a stance you want to take, that just calling it a bubble and hype, when we're still like at the baby stages of this? It's not like this is some hype train that's been building up for years, right? This is like new. Like, no one even talked about AI other than us that are super into the stock market. No one talked about AI 6-9 months ago, right? And so I think these are just things that we all have to consider out there. It's not like this is a situation where retail's all over this. I asked a friend, I said, look at Wall Street Bets, try to tell me if everybody's talking about Palantir. This was last week, because I was kind of curious, right? He's like, dude, I can't find any talk about Palantir inside Wall Street Bets. This is not like some GameStop, AMC stock situation that we had, a few years ago and whatever, that retail's all behind and everybody's got stimulus money and pump it into these stocks. Everybody's looking at AI from a skeptical angle. Even bulls like myself think about it and kind of like, well, are we really going to come in with those numbers? Everybody is. Why did this happen? Because the NASDAQ went down 37% peak to trough in a matter of less than 12 months last year. Remember that, right? From November 2021, when the NASDAQ peaked, through, halfway, 3/4 of the way through last year, we were down 37%. When you get slapped like that, everybody starts thinking so cautiously about everything, and everybody goes in with such a skeptical angle. And that's just another reason why I'm like, if this was 2021 and everybody was hyped up to the moon, that'd be a totally different situation. But we are not in that situation at all right now, okay? So, in terms of some of my biggest mistakes I made in the market, the ones that you lose money suck. But I can tell you these ones are sometimes even worse. And a good example of this is ELF, right? ELF's a stock, I'm up 1,341%. The problem with ELF is I only have 1,000 shares of ELF. I used to have, between my different accounts, probably close to 10,000 shares of ELF. And when ELF went on its first big initial run, where the stock climbed, 40, 60, 80, 100%, I sold out of most of my shares. I sold out of most of my shares of ELF. And it's very painful because that stock's now, $100 plus dollars. And I wouldn't be surprised if it's a $200, $300 plus stock in a few years. And there I am with a fraction of the amount of shares I once had, because I thought I was being smart in taking profits, okay? And, those are the old saying of you never go broke taking a profit. Yeah, you also never get rich taking one of these short-term profits. It's just not the way this works, okay? And, I sold a lot of my ELF shares, kind of in these ranges, right? And I missed out on this huge opportunity here, right? And so when it comes to a stock like Palantir, I just think selling this early into this opportunity is like me cashing my shares when ELF went up its first, 40, 50, 60% after I bought it. And then realizing you miss out on the 10x. So that's kind of my thoughts. Monster was a great company I held back in the day, right? It did me tremendous. But when it came to Monster, right, I'll be honest, I missed a lot of the gains. I took nice profits in Monster. Monster was like a top 3 position for me for a while. And then I ended up selling all my shares over time. And, it was somewhere in this kind of range is where I sold out of, most of my shares. And I thought I did great. I missed out on this. I missed out on this. So these are just food for thought, folks, okay? You don't have to be so quick to take profits. If you really believe it's a game-changing company, you don't have to be so quick to take profits in these stocks. Let them run. It's going to be a bumpy ride. It's going to be uneven. Even Monster. Damn, look at Monster. Monster is one of the best performing stocks in the history of the stock market. It's been a bumpy ride. And I mean a bumpy ride to get there, right? Remember that old picture? This is what it's really like, man. It's a bumpy ride to get there. And, that's why I'd rather just hold these stocks. I've learned the hard way several times with stocks where, these game-changing companies, let them do their thing. They got great teams in place, management teams, employee forces. You don't have to be quick to take a profit on these stocks, okay? Especially when you're early innings. You're really early innings in regards to this, right? Now, a bunch of other things I want to talk about here that are very, very important, okay? Very, very important. So this was one thing that's being put out there, right, to kind of scare people right now. Goldman Sachs says the Treasury Department will have to quickly raise $1 trillion if and when the debt ceiling is approved. Liquidity will be drained from the market to purchase these treasuries, right? And always something to try to scare retail. It's just, that's what it feels like. There's always something like, oh my gosh, this, right? I hope that happens. As somebody that buys stocks every single week, please send the market down. Begging you. And so isn't everybody that's way off sides right now begging for the market to go down, okay? Is there anything going to happen there? Probably not. But if there is, I'll be happy. I'll be happy buyer, okay? Send the market down. Please do it, okay? Saw this out there, right? Such a bad take, okay? So, this person, and obviously this type of stuff that gets headlines, and if you're not very educated on financial markets, on how to value companies, you look at something like this, and if you don't have much experience, you're like, oh my gosh, yeah, this is crazy. Oh, price to sales ratios, look at this is insane. Look at the S&P 500, look at NVIDIA, 215. You go crazy, right? Oh, price to sales ratios, oh my gosh, freaking out, right? It's not how you do this game whatsoever, okay? Price to sales ratios, comparing price to sales ratios across the stock market is one of the most delusional, silliest things you could ever do. Ever. It makes 0% sense to compare S&P 500s for different stocks in different industries and sectors. It's not how this game works. Different sectors, different industries deserve much different valuations than other ones, okay? A SaaS business is going to command a very different price to sales ratio than a retailer, for instance. Why? Because their profit margins are immensely different. Their net margins are immensely different, okay? A good example of this is Macy's, okay? Macy's, the retailer that's in your local mall, okay? Their price to sales ratios are usually anywhere from 0.1 to 0.3, right? So you can say, oh my gosh, Macy's has got to be the greatest deal ever because, good, look, price to sales ratio S&P 500 is 2.4. I mean, Macy's at 0.1, 0.2. Oh my gosh, it's got to be the greatest deal ever, right? And you can run with all these conclusions in your mind. It's not how this works. It's not how this works, okay? Retailers command very low price to sales ratios because their margins are razor thin, right? And so that's not the way to look at this. The only time to look at price to sales ratios is if you're comparing within the same industry with the companies having roughly the same growth rates, okay? So let's say I want to buy a retailer, right? And so I'm looking and I'm like, I'm thinking about either Nordstrom, Kohl's, or Macy's, okay? Let's say that was my thought process. Well, I could go ahead and I could look at the price to sales ratios of all those companies and say, okay, Nordstrom trades at a blah, blah, blah. Price to sales ratio, Kohl's at a blah, blah, blah. Macy's at a blah, 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 right? And I can look at the forward Ps, and maybe the forward Ps are roughly the same. So, I look at the business models, and then I'm like, you know what? I think this one's a little better because the price to sales ratio is 0.1 versus this other one's 0.2, and this other one's 0.25. If you want to compare it a little bit that way, there you go. There you go, okay? But in terms of looking at price to sales ratio, that's the only time it's relevant. When you're looking at inside very specific stocks that are roughly viewed as the same type of companies, right? If you wanted to look at Walmart versus Target and you want to compare them on a price to sales ratio, do it. That's perfectly fine. But to compare Walmart's price to sales ratio versus Salesforce's price to sales ratio versus Apple's price to sales ratio versus, Shopify's price to sales ratio, it makes no sense, okay? Always remember that. That was a very important point I just gave out there to everybody, okay? That's a free gem for you. Boom. There you go, okay? Now, next horrible take by this gentleman, price to earnings ratios, right? He shows us, oh my gosh, NVIDIA, 215. Oh my gosh, it's the most overvalued. And this is stuff that sucks in retail. This is why retail has been so hell-bent on shorting the stock, buying put options in the stock. It's ridiculous because they look at this and when it was a 50, they're like, oh my gosh, and 100, and then 150, then a 200, right? Here's the deal. Based upon analyst numbers, NVIDIA right now is trading at a forward P of 50. Now, they just said they're going to do 60% plus revenue growth next quarter, right? So I can tell you a 50 forward P when you got 60% plus revenue growth is not a high valuation at all. Never mind that. Analysts were just massively wrong with their prediction. They thought NVIDIA is going to come in next quarter with $7 billion. NVIDIA says they're going to do $11 billion, right? Okay, let's think about this logically for a moment. Do you think maybe they're a little lowballing these EPS numbers? And maybe in this fiscal year, NVIDIA could come in with, dare I say, $8.50, $9.50, $10 EPS? Have we considered that? So maybe, just maybe, the forward P in terms of this upcoming fiscal year, the one we're in right now, maybe we're at a 40 right now. And maybe the following year is at a 30. These are things you have to consider, right? Have to consider this stuff. So just bad takes all around, man. Bad takes all around. It's a more sophisticated game than just being able to put on a tweet, this and this and this. It's a little more complicated than that. And that's why there's arbitrage in this game. That's why there's a lot of money that can be made or lost, right? Now look at this. This is a tweet I saw out there. The ratio of NASDAQ 100 to Russell 2000 stocks is now retesting the peak of the tech bubble levels. Situation similar to today where smaller companies perform poorly compared to large cap companies, right? So one is people look at this and they say, oh my gosh, all these stocks got to crash. NVIDIA's got to crash, right? Amazon has crashed. Apple, Microsoft, all these companies all got to crash to the floor, right? So it's always a possibility, always a potential, always something that can happen. But you know what else could happen? Gosh, maybe these Russell stocks, these small cap stocks that have been underperforming for 5 flipping flapjacking years, maybe, just maybe, they wake up over the next 12 months and they start coming back to life. And maybe the Russell starts outperforming some of the other indexes. These are things you have to consider, okay? There's 2 ways you can get there. Or maybe some of the NASDAQ 100s come down a little bit and the Russells step up their game, right? There's a lot of different ways that this game can be played now at this point in time, right? Now, in terms of building out portfolios, and kind of my 2 cents on this, right? You got to stay focused out there. You got to stay building your portfolios. And the same opportunities of last year are not the opportunities of this year. Opportunities you might have got 6 months ago are not the best opportunities today, which today's opportunities you're taking advantage of will not be the same opportunities 6 months from now, okay? And so if I look at something like Meta, right? Meta was a tremendous buying opportunity, right? Last year. I put $77,000 in Meta stock in a day. Like, that was one of the craziest buys I've ever done in my life, but it was like stealing money at that time, right? And so when I look at something like Meta, I have 0% interest in selling the stock because ultimately I believe Meta is probably a $400, $500, $600 stock in a few years. So I really don't have any ambition to sell the stock, especially when I know the crazy numbers that are coming from Meta over the remainder of this year. The EPS numbers and net income, wait to see that over this next 3 or 4 quarters. Going to knock your socks off, in my opinion. So I'm in I have no reason to sell the stock right now. 0% reason. Now, on the flip side, right? As long as you're always in a position where you have more income than expenses, which I hope everybody watching this does, and if you're not in that position, get on that ASAP, right? Get more income than expenses. You're always in a position to buy, right? And so you can take advantage of different opportunities out there. In the market right now, what I see, a lot of opportunities in value stocks, in dividend stocks, and in different growth stocks than last year. PayPal is a tremendous opportunity in this market. And, Metas, Palantirs, those sorts of stocks are certainly still opportunities. There could be money made. It's just not that crazy money now at this point in time, okay? And so just continue to be focused out there, build out your portfolios, build out positions you're going to be proud of holding for the coming years, okay? I appreciate everybody joining me as always. Thank you so much for being subscribed, folks. If you're looking to apply to join my private group, you want to learn everything I have up here, plus be part of my exclusive Discord chat and all those sorts of things, then check out the description area. That will be for an application down there so you can join us in there. Much love and have a great day.